Space exploration has always been one of humanity's most ambitious dreams, a dream shared by children and some of the world's brightest minds alike. It's the ultimate symbol of progress. Rockets, astronauts, moon landings, satellites, Mars missions. But behind the romance and the heroism lies something far more complicated: the economics. Because space is not just a scientific frontier, it's a financial one. And the story of how we got from the Cold War space race to billionaires launching rockets is one of the strangest economic transformations in modern history. Welcome to Rebel Economics. Today we're breaking down the crazy economics of space exploration, how it started, who paid for it, and how private companies like SpaceX flipped the entire industry upside down. Let's start at the beginning. The economics of space exploration began not with science, but with fear. In 1957, the Soviet Union launched Sputnik, the first artificial satellite. It was a metal sphere the size of a beach ball, but it sent shockwaves through the world. Suddenly, space wasn't just about exploration. It was about power. Whoever controlled space controlled the future. The United States responded by creating NASA in 1958. And from that moment, the space race became a geopolitical arms race. The goal wasn't efficiency, it wasn't cost effectiveness, it was victory. The numbers are staggering. At its peak in 1966, NASA's budget reached 4.4% of the entire US federal budget. Adjusted for today, that's the equivalent of $260 billion per year. For comparison, NASA's budget today is around $25 billion. Less than 0.5% of the federal spending. The Apollo program alone cost $25.4 billion in 1973. Adjusted for today's value, this would be roughly $257 billion. That means the US spent more money landing humans on the moon than the GDP of many countries. But here's the thing, the economics didn't matter. The goal was symbolic dominance. The US wasn't buying rockets, it was buying prestige, global influence, and psychological victory over the Soviet Union. And it worked. In 1969, when Neil Armstrong stepped onto the moon, the US won the space race. But after the victory, something changed. The political urgency faded, the budgets shrank, and space exploration entered a new era. One defined not by competition, but by cost. After the moon landings, NASA's budget collapsed. From 4.4% of federal spending, it fell below 1% by the mid-1970s, and has stayed there ever since. Today, NASA receives 0.48% of the US budget, 1/10 of what it got during Apollo. This forced NASA to rethink everything. The agency needed a cheaper way to get to space. That's how the Space Shuttle was born. A reusable spacecraft designed to lower launch costs. But here's the twist. The shuttle didn't make space cheaper, it made it more expensive. NASA originally promised that the shuttle would reduce launch costs to $118 per kilogram. In reality, it cost $54,500 per kilogram, almost 500 times more than promised. Each shuttle launch cost around $1.5 billion. And why so expensive, you might ask? Because the shuttle was reusable, but extremely complex, safe, but required massive maintenance, versatile, but inefficient, and government-run with no competition. NASA was trying to build a Swiss Army knife for space, and Swiss Army knives are never cheap. By the 2000s, the shuttle program was costing NASA $3 to $4 billion per year, and after 2 fatal disasters, it was retired in 2011. For the first time in 50 years, the US had no way to send astronauts into space. NASA had to pay Russia $90 million per seat to send astronauts to the ISS. Space exploration had become too expensive for governments alone. And that's when everything changed. In the early 2000s, a new idea emerged. What if space didn't have to be government-run? What if private companies could build rockets cheaper, faster, and more efficiently? This idea was radical. Space had always been dominated by superpowers. Rockets were too expensive, too dangerous, too complex for private companies. But then came Elon Musk. In 2002, Musk founded SpaceX with $100 million of his own money. His goal was simple: make space travel affordable. His method was revolutionary: build rockets that could be reused, not just in theory, but in practice. This is where Musk's idea diverges from the reality of the shuttle program. NASA reused the orbiter and the solid rocket boosters. But after each flight, the inspections, replacements, and refurbishments necessary for the shuttle to be reusable made it so expensive that it wasn't feasible. And while we now look at its success, SpaceX's early years were brutal. The company's first 3 launches failed. Musk said that if the 4th failed, SpaceX would die. But in 2008, the 4th launch succeeded. That same year, NASA awarded SpaceX a $1.6 billion contract to deliver cargo to the ISS. That contract saved the company and changed the economics of space forever. SpaceX's real breakthrough came in 2015, when it successfully landed the first stage of its Falcon 9 rocket. This was the moment everything changed, because reusability destroys the old economics of space. A Falcon 9 rocket cost about $62 million to build, but the fuel costs only $300,000. If you can reuse the rocket, the cost of each launch drops dramatically. SpaceX now reuses boosters up to 20 times. That means the cost per launch can drop from $62 million to as low as $2 to $3 million. Compare that to NASA's Space Shuttle at $1.5 billion per launch, or Russia's Soyuz at $80 million, or Europe's Ariane 5 at $165 million. SpaceX's reusable rockets made space 10 to 20 times cheaper than traditional rockets. And this is why SpaceX now dominates the global launch market. In 2023, SpaceX launched 98 rockets, more than every other country on Earth combined except China. And this is just the beginning. SpaceX is not just a rocket company, it's a satellite company. And this is where the economics get wild. Because SpaceX is building Starlink, a constellation of over 5,000 satellites that provide global internet coverage. The goal is to reach 12,000 satellites, with approval for up to 42,000. For years, Elon Musk insisted that SpaceX would remain private forever. He said going public would force the company to chase quarterly profits instead of long-term exploration. But that changed in June 2026, when SpaceX made its surprise debut on the Nasdaq. Overnight, it became the largest IPO in history. Shares were priced at $135, opened at $150, and by the end of the first trading day, SpaceX was valued at roughly $2.1 trillion. This is even more astonishing when you think about the fact that only 5% of the company was actually sold to the public. Musk still controls over 80% of the voting power through a dual-class share structure. This means that he raised nearly $85 billion while giving up almost no control. This IPO didn't just inject SpaceX with capital, it fundamentally changed the economics of space exploration. SpaceX is no longer funded only by NASA contracts, commercial launches, and Starlink subscriptions. It is now funded by public markets, index funds, institutional investors, and millions of retail shareholders. Space exploration is no longer just a scientific frontier or a private frontier. It is now a financial asset class traded on the open market like any other industry. If you zoom out, you can see that the space exploration has moved through 3 distinct eras. The first was the government era, from 1950s to around the year 2000, when space was almost entirely funded by states. NASA and the Soviet space program spent billions not for profit, but for prestige, military advantage, and national pride. The second was the private era, beginning in the early 2000s, when companies like SpaceX, Blue Origin, and Rocket Lab proved that private actors could build rockets cheaper, faster, and more efficiently than governments. Reusable rockets slashed launch costs and competition, something NASA never had. They suddenly became the driving force of innovation. And now we've entered the public market era, starting in 2026 with SpaceX's IPO. For the first time in history, the world's most important space company is directly tied to the stock market. That means Mars missions, moon bases, satellite constellations, and deep space infrastructure can now be influenced not only by engineers and scientists, but also by shareholders, index funds, and quarterly earning calls. Space is no longer just a frontier of exploration. It is a frontier of investment. This shift from government budgets to private capital to public markets is the biggest economic transformation in the history of space exploration. And it raises a new question. What happens when the future of humanity in space depends not just on political will or scientific ambition, but on investor confidence? With SpaceX publicly traded, the economics of the next frontier have shifted again. Missions to the moon, Mars, and beyond are no longer funded solely by political will or billionaire ambition. They are now influenced by investor expectations, index fund inflows, and quarterly earning pressures. That means exploration will accelerate, because now space isn't just a scientific endeavor, it's a trillion-dollar industry in the making. NASA's Artemis program aims to return humans to the moon by 2026, with the long-term goal of building a permanent lunar base. The reason is simple. The moon has resources, water ice, rare minerals, and helium-3, that could support a $100 billion per year cislunar economy. Meanwhile, SpaceX continues developing Starship, the largest rocket ever built, designed to carry over 100 tons to orbit and eventually transport humans to Mars. The economics behind Starship are staggering. If it becomes fully reusable, the cost of reaching orbit could fall below $100 per kilogram, a price that would have been considered science fiction just a decade ago. But the biggest economic engine of the future isn't rockets, it's satellites. Starlink already has over 5,000 satellites in orbit and millions of subscribers worldwide. Analysts estimate it could generate 30 to 50 billion per year once fully deployed. And now that SpaceX is public, Starlink's growth directly affects the company's valuation, meaning the expansion of global satellite internet is no longer just a technological project, it's a financial imperative. We're also entering an era where space tourism, asteroid mining, orbital manufacturing, and off-planet energy production are no longer theoretical. Companies like Blue Origin, Axiom Space, and Rocket Lab are building the infrastructure for a commercial space economy. The global space sector, valued at $546 billion in 2023, is projected to surpass $1 trillion by 2030. And with public markets now involved, that growth could accelerate even faster. The future of space is no longer just about exploration. It's about industry, investment, and economic expansion on a scale humanity has never attempted before. Space exploration has always reflected the economics of its time. In the 1960s, it was a government project fueled by political rivalry. In the 2000s, it became a private sector revolution driven by innovation and competition. And now, in the late 2020s, we've entered a new era. One where space is a publicly traded enterprise shaped by markets as much as by science. And the SpaceX IPO proves what happens when the world's most ambitious space company gains access to virtually unlimited capital. We are witnessing the birth of the first true space economy, one where satellites, lunar bases, Mars missions, and orbital industries are not just scientific milestones, but financial opportunities. Space is no longer a distant dream. It is a market, a frontier, and a battleground for investment. Thanks so much for watching Rebel Economics and another video in my series of The Crazy Economics of. I really enjoy making these videos, so if you want more like this, then leave a like or a comment, subscribe to the channel, or even better yet, watch another video.